Good morning, friends. This is Jeff Arcos. Welcome again to the daily webinar. Today we are Monday, 22nd of July 2019. Remind you this webinar is not meant to be a financial advice. This is only an education presentation. Please consider them and condition before you continue. Same when you're receiving this recording. So thank God for another day into my life, and I pray His blessings for all of us. In Jesus' name, amen. All right, we made another week, and the good news that I am alive. I survived. Um, and Saturday morning I have to do breath test. I didn't know that you don't have to drink water for the breath test, and then I have to come back home and come back at 1 o'clock, so I could not eat nothing, drink nothing. But after that, I have a nice lunch for the first time in the week. So I was tell you, it's amazing how much you appreciate food once food is out of the menu for days. But anyway, so I'm waiting for test results, but I'm completely back again. And ate good yesterday too, and wake up with everything ready to run. All right, so today we're gonna do some kind of um, modifications then on E8 as well um, on the system, and we will judge that anyway. So we'll see how we go. On the news side, it's amazing we don't have hardly anything today. The 22nd after midnight. On the 23rd, we got the Japanese 1 a.m. Kuroda speaks. So we'll see what happened with that one there. All right, so we're gonna go straight to here because I just want to touch bases with a few things. Now we were talking about the power of looking about below of the midline and an index mid and everything there. That's nice, but that's sort of strategy what I call a scalping strategy that you want to get every single move into the market. For example, if you let's take this one off, you're going to be, for example, in that bar there. So we are above the midpoint of the line. The colors for sure should have changed. The dungeon for sure should be changing even, and actually this is not cloning properly. It should be the day before. Come on, there. That should be the day. And everything possible is right in place. It's the one in cloning on the proper place. Come on, be good boy. Now where were we here? I better put this guy in the middle. There you are. What happened with you cloning? Why you're not cloning? You're supposed to be cloning. It's not cloning. No, sorry. Oh, it's in the other indicators are the cloning. And no, it is here. Okay. There we are. So yeah, so everything indicate, I'm not too sure what the index meter will tell us, but in this case, what you are actually doing, you're trading against the trend. Sometimes we might get lucky, sometimes we might get this. And this is where, I'm really consider weekly, daily time frame trader more than this is for me, yes, it's a daily view, but it's more into super active. For me, I prefer is this is what I prefer. So here I can see very clear the market has come to to what I call the golden touch, comes over there, the daily is there, and then we go. That for me is really what I feel more comfortable. am I actually personal trade than to trade every single spiking move just because the strength can go. I believe it's good if you're gonna watch the market, maybe reduce the numbers of your lot size and things like that, because that could cause a lot of things. As we've been saying before, there nothing beats the ABC setups, and one of the good things with the weekly candle close, I don't know if you notice through there, that every time, for example, you have this kind of sort of it is a problem over there, you will find an ABC in place. And this is now what I like to see. Okay, where the index meter is going to tell me what to go, then I can target it, from here to there. I got my target. Every time we have a weekly like that, we can for sure say, here we have a small ABC. We don't want it that. That's the next ABC. Then we clear. We have that target and that it is. So that's the type of trades I really enjoy. I'm not that young really to get into, because here in this bar you will have the three indicators that the 1 hour is telling us, with the color, with the closing below the midpoint, um, changing of the dungeon, everything will be there. But when you're looking here, we are actually using these retracements only to go on the directions of what we see over there. And this is where we can get caught up in too much trading. So that's another one. So the market was go 1, 2, 3, 4 weeks, and there it is. So, and the option is not trading, not putting the, yeah. All right. So that must be, I believe, that part that it closed out. Sometimes this one doesn't clone properly. Where was, oh, here. It's that one there. So that's the one there. So the same up here. That every time the weekly is in that position, we need to keep our antennas alert that we need to search for the ABC with the golden setup, because this is where things really spikes. And when we have that, there it is. Okay, and this is the job now through here is the daily index meter. And once we got that, we just grab it over there, put it over here, and there we are. And we got the target. And normally, target number one, target number two. So this is actually the target number one is the remember in the other bunches I have above, below. You remember that? So minimum target, maximum target. So this is the midline of those two targets. And same with that one there. So the value for that I think is 179. Yeah, 719. So that's the midpoint of the two minimum and maximum target, and it seems like it works quite okay. So the first one is the minus 0.719, and the other one is minus 17. All right, so this is and that's what I'd really enjoy. Even if I don't get the target, I can just move my stop loss and then get. So I don't trade, quite often, but every trade that I do is actually, quite well based accordingly over there. So for example, if I have there, now can we see here an an ABC bearish? No, it's not. The market continue on there. Look every time, and the beauty is that you have to search for that one on the moment that the market is, opposite. So we're looking for a turning point, and this is the three candles that we were talking, remember, before, and that's why it's important to keep that, and that you can put it at turning point from there, and you don't look in anything until when until you have a new turning point over there. And you're not looking nothing until you have what? Another turning point over there. And you don't look nothing more until you don't have a turning point. So identify these turning points into here in the weekly. It will allow us to make the job very easy, not to take everything that looks nice and it looks tentative, so one of the commands about actually said is flee from temptation. And as a trader, I've been, quite a few years now, sort of practicing the golden candle, and it's something that it really give me peace in me to that. But for the golden candle, we need a process, and this is where we need to have the patience that we always say, and the process is very simple. We need a very strong trend line breakout. So and this is the indication that is telling me, and that one there is only made by the weekly candle close. So that's what's the watch list of the weekly candle close that we need to always keep in place. And then so this is what we call, I don't know if you remember, we used to call the TRB, which is the trend, the retracement, and the breakout. Okay. Oh, the famous ABC and that. Then we need the retracement. So step number one is the break. Step number two is the retracement, and step number three is the day that the index meter is telling us. And no matter how far we go, we just continue doing the same thing. 1, 2, 3, and try. And then that it. So in any point in the market, you know, we can see 1, 2, 3. If that fails, that's the next one. And there we are. And towards the target over there. So that's very important. And if we keep, always line up with that, you will find that that ABC always will be there. So in the moment that I am, and the first thing I do every week when I come and I sit in the morning. Now I don't know if you know how you do. One of the things that actually I don't do, I just finish my breakfast, and that's for some time there, because I don't have food before make the decisions in the morning. When you eat, some kind of big breakfast, actually your brain need blood. And sometimes this is the blood that you need when you're thinking about what to do. It just helped my concentration. So that's something that I don't disturb. But right over here, I can very clear see that it's definitely I have what I call is my breakout. So then I can set up there and then patiently wait for the day whether here I have one loss, but this one is there. Now from that point on, as we see, we don't have nothing more, not even with that. But from that point, one of the great things that actually you can use that in your advantage. Because if we don't have an ABC, we don't have a trade. But what actually we can use that is to trade the direction of the most weekly candle close. Then if the daily says to me over there, of course I'm gonna be trading from there. And that's the results, the end results of that. And every time you have a new trade, let's say you break, you just bring this one, from that, and that's it. From the previous, whatever trade you do, you look the previous leg. Whatever trade we do, we just look in the previous leg. So we trade over there, we get a stop out, we trade over here, and that's where you get it out over there. So normally that's the case over there. But here it's very easy to see that when something is happened here, we don't know what had happened over there, but something has happened over there. So this is like a calling for us to say, look for the ABC, in this place. And this is when we come over here and we come once a day. If I look and just trade these, I would be going maybe that one. Then last week I would be go short that definitely over there, and then maybe closing out. But now that I have the market finish over there, this is really where it close. Um, that's where it closed there. All right, because that's the pullback. That's the day. So if I look over there, I can say, okay, yeah, my short got a stop out. That's fine. But now I have what the weekly is telling me and what the daily is telling me over here. And from that point, I can immediately, for me, I don't question, this trace. I know that this is for me for fact that, the close of that candle or the intersection of that candle, it works as a platform for me to trade. And as you know, here sometimes we have these hiccups of the moment, and this is when we're dependent for the index meter. Once we have that one there, we come over there, put it over here, and whenever our entry was, if there, and let's say we hold that trade over there. I don't think so I would hold that trade. Maybe here, this is where I would hold 54 pips, and I have 177. I would be very happy to get those trades over there. So this is the benefit of looking, every time you have what we call an ABC, is look what the weekly direction it is look what the weekly direction is telling us. For example, this one was a bit down because the weekly is up. But for me, do I have a ABC opposite? And this is the question that I said to you, that sometimes we can use these weeklies and in advance for us to trade what happened of the previous week. So completely there. But overall, if we're looking, over and over again, every time we have this beautiful ABC set up, the weekly will be with us over there. And until we don't have another one like this one over there, guess what we're going to do through the whole week? Just continue trading that direction. You know, I think the style of trading that we have is quite different than any. There are a lot of people love the scalping, and I believe that the technique that we have over here is quite nice for scalping the market. Um, and this is quite interesting, for everyone um, to try from there. But this way that we try to look, is very simple, because what we're waiting is for a trend up, come back, and day up, and the weekly will be with us in those trades over there. And every retracement is a frame. Retracement is a frame. Retracement is a frame. And we can continue until we don't have what? We don't have that, we say. We continue doing what we know we're doing from there, isn't it? So are you happy with that? Is the better trade less? The moment that we trade less, but we risk less, but as well we um, you know we actually putting sort of kind of confidence in the market. The forex market is really one of the most volatile market. It's like I remember someone's watching a movie about disactivating this explosive and bombs, and one of the rules, they say the first mistake is the last one. And I laugh because there is no space for error over there. Um, but this is actually, a quite good way there. Now I'm going to show you something a little bit crazy that you might like it, and but the reason I want to show you is so you understand what I do or what I do. You will see me sometime trade against the weekly candle close. You happy with that? The watch list might be, very, very crazy. That says, yeah, this the Canadian is very weak. This week, let's look for short. All right, and this is what I want to do. I want to use the daily index meter to trade against the weekly direction. All right. So I hope so I'm not confusing with that, but it's something that I've been observing, that if I come at the end of the week and I say, okay, here is that, do I have here an ABC, for the short side? That's my first question over there. But what happened to the daily index meter when they did point me to there? Now, what am I going to do there? Should I just, say, oh no, look, the weekly is down. I can't trade that one there. All right. So what am I going to do there? I'm gonna try long because this is only a retracement from there. So and you will see some trades that actually I will set up, to trade long instead of trading short. Now look for example over here. Should we go short? Oh yeah, maybe, because look, if we put a line over there, oh, we have a very close, previous resistance over there. That's a perfect to go short. Look, trading double tops, double bottoms of the market are quite nice, all right? It just sometimes it makes people feel very smart in that way, but I'm not in that smartness. Okay, I don't know when really it's gonna be double bottom, double top. So instead of me looking down, what I'm gonna be looking over here, and I said, okay, I don't have any way, shape, or form ABC on the bearish. So this is not for me. A what? A turning point. All right. So I just gonna ignore it. But if the index meter, daily index meter, point me over there, now I want to be looking over there. All right. So that's gonna be happen sometimes when you see me trading. I say, but we're trading against the weekly index meter. Why Jeff is using there? For example, that what the weekly say is say closing up. It has a big tail, but at the end of the day, I'm trading the direction. Um, there it is. New Zealand. Okay, we're gonna be looking New Zealand as well. There, but every time you find those weeks like this one, it could be an opportunity to actually maybe know what about that. You see here, we could say, oh, we're gonna set up to go long because the weekly says no, but what look what is happening over there, you know, and this is when we need to get a little bit of common sense. Maybe here we get caught up because here, yes, definitely, if the index meter is showing me over there, there. But what happened next? And now I can see, and here I have an ABC. You see, that's the difference between this bullish candle compared to that one. That here I have what I call and sometimes we're gonna try breakouts like this one. When the market comes and breaks that one there, and if the daily is like that, we're just gonna jump. All right. So that's number one. So everyone happy with that? So trade less, more consistent, and actually gonna open today the new account with ETO, and possible, this it's a new website is coming, so where ETO will be actually automatically instead of me doing the spreadsheet and everything, all the trades will go over there. So there. Now, number two is the most important part. That one of the biggest problems we actually have with them. Everything has pro and cons. All right, and every time we try to look, this kind of trace, for example, in trading. Let me see that. No, that's not going nowhere. ETO is a broker from GMT Forex, GMT Futures. Sorry, there's a brokerage firm. Um, now, all right. So one of the biggest problems, maybe not here, where I can show you exactly what I mean. With a midpoint retracement, one of the biggest challenges we normally will have with that, that we have two styles of trading the breakout or trading the pullback. All right. So the one of the biggest problems that we have with the pullbacks, because at the moment the way that the index meter is that in place, it doesn't do what I want. It only has like a buy and sell limit orders, which is I'm not that keen. uh, the other one is the breakout. So what is the benefits from the breakout to the pullback? The pullbacks, I believe, is a nice and aggressive way of trading because you are sure that the market will go in your direction. But what happened with the that's the benefits, isn't it? But what is the things that sometimes what the price does? The market does not retrace to the midpoint. Okay, so that's the biggest problems we have. And as well, we have the other problems is that if the market stop you out, it will kick, if you have two or three chances, the EA will continue, trading over there and put in positions when you should be finished over there. Now, trading the breakouts is quite different, than what we trading there. Now, and many years ago, I remember Helen said to me that she likes the number 10 on the Donchen for entry. So we're gonna try the number 10 for my entries. All right. And we're gonna see that if I want to entry over here, all right, and I said I'm still looking from here, this is my pip, okay, 30 pips. So what the EA will do is will be looking to look from there and then through the 30 pips stop loss. So every 10-hour support and resistance levels, the EA will follow, and I believe, it will be because, every trade that we do with sort of some kind of certainty that this is where the market is positioned us for us to do, and one of the things as well is about Asian market again. So here, for example, it would be a loss. So 2027. Now, if we come at London time, I like to move to the next fractals anyway. So that will be 10 pips over there. But here, what the market does is comes over there and dips over here, put whatever stop loss it was designated, and then runs with those trades. Here, one of the benefits of that of trading the breakout is that you will not be triggered in this midpoint, and the next day you will see that the market didn't do nothing. So what happened there? You did not get triggered that trade. So it will filter, from the morning. It will be filtering that you are not gonna be positioned in those trades. So it will save us the breakout instead of the pullback. So then that's fine. But then 2 days later, there we are. Now the difference between the midpoint and that, it maybe could be some grade of deal, but at the end of the day, we don't want in the right entry. We just want in an entry where we can place our entries over there. Now the thing is quite nice. So Helen, yeah, I think it was last year when you told me about that, and I don't think is bad idea for an entry, but not for trailing stop. So what I have done now, I have done few things here. So this is yeah. So this is the idea. So if in here I'm wanting trade from there, I'm wanting the number 10 triggerment right over there, So right, because we don't know whether this could be or not could be from there. But the thing is that this is, I can come here every time and move my trailing stop where I want to be moving, because this actually it is the 25 Donchen, and this is the 10 doesn't show. So I have the first BR, I have a number 10, and the second BR, I have a 25. So the only thing I do is just reduce the colors of the trailing. So if I look, and this is what I do. So this is only for buys that I have set up over here. Now, if I want to be looking something for sales, and as well, so if I look in this one for the buys, I got the Donchian. So it's going to be 2 trades I have, long duration, but the Donchian period is going to be number 10. Now, depending the volatility of this, so if I look from here to there, Yeah, 30 pips is more than I can give it to this one there. So when the volatility is lower, my entry pip buffer will be 5. And I don't have trailing stop, so no trailing stop. So I do once a day manually. I have a break even, maybe 10 pips about the maximum of my entry, and I got my 30 pips with 150, so 1 to 5 win ratio reward, and this will be for the long. Then I have for the bigger number, which is the 50 and 300, actually, I put it. So here I got the Donchen, exactly the same, long direction. I got the number 10, but my pip buffer is 10, not 5. Because this is, if the stop loss between here and over there is, what I'm looking is just because this is what I do manually. I just looking, okay, where my two fractals, this is my data I want to decide. I want to be looking the two previous fractals to use my entry, my stop loss, and then I calculate over there. So I have 50 and I aim in 300 and 60 pips break even, no stop loss whatsoever over there. All right, so that will be, filtered. So in the sell is the same, so opposite there. So here I come over there and look at the price and look over there, 30 pips. Yeah, that's it. That's all I need. So I put a buy 30 and 150. I have to change the templates there, and that's it. So for me now, it's guaranteed that from here I'm going to be looking to trade over there. And I say as well, I alter this one's data. For example, this is on the sell side, and I just changed the sense. So if here it was my trade for any reason whatsoever, so what I do is measure from from fractal to fractal where I am. Oh, 30 pips is enough, to put it over there. The market triggered them over here, not trailing stop, but then I can do manually over there because it's quite nice that manual. If I come once a day, and I got and this is where we don't want to be, disturb our trace, because if I put it the number 10 or the 20, you would be out and this spikes over there. Okay, so here's another one. So here we can say, yeah, this is a trade for me. I'm happy, I'm just gonna trade that day. But this is the beauty of the 10. The 10 is actually looking when it comes London time. Actually, and Helen says she's still using that because you brought it out a long time ago. But I thought that I think the trailing stop put me off, but it's because I didn't do manually. But I think it's a great idea because from the 10 o'clock in the morning to 12 hours later, which is 6 7 o'clock, what the Donching is looking, okay, what had happened through Asian and London market, and if the market has consolidated, this is when it actually follows over there and triggers over here. And if I look, from where I was, I would not use that, because this is a high volatility from there. So I will be possible using the midline over there. So this is where the midline it was, and through there, yeah, 30 pips is enough. So the market triggers from over there, 30 pips somewhere over there, or maybe 25, taking the 5 pips in consideration. So 25 pips, and then the next day here, the next day there, the next day there, the next day, and then out of that track. And actually after you have few days going, then you can maybe go and modify it. Say, okay, I wanted a 25 trailing stop, just in case if the market, because here is this was a big nice drop, but here maybe it's not. It's just matter of there. So this is let's say we're just looking at the moment only short opportunities. So there it is, 15. So 30 pips is more than enough over there. The market comes, hit us over there, 30 pips. The next day we put it over there, the next day there, and the next day over here. And you walk away. Helen said, I don't use the Dungeon channel stop loss, only the 50 pips stop loss and all my trades. Yeah, that's good idea. Maybe for the, currencies like Australian US, 50 pips could be a huge, huge there. So this is another good example over here that the market comes over there, and this is where the market, we're looking to go short. We don't look in there. We don't want in the midpoint. But look what happened later, 10 hours later. So the EA just come clink over there, so we don't have to watch nothing. If the market is gonna break, it's gonna break from here. But the beauty of this is very active. It comes over there, breaks over here, and that it is. So if here to the midpoint is 35, 30 is still okay. So um, there it is. So 30, and then here, and then there, and then that's it. 47 pips. So I have to be happy with 47 pips. Who will be happy with 47 pips? You know, and that's all. All right. So that's the two things that we have. Okay. So and it will give us, quite interesting way of looking over there. So let's look now our trades for this week. So that's why my workspace is a bit different, and we're still in the big nightmare. So we have to put some more praise to make this thing move somewhere. It start getting me annoyed that it's no moving nowhere, and I just keep that these things playing around. But so far this is a weekly down. This is no bullish, so we continue just looking the direction that the market is telling us. So at the moment, the US is strong for Monday, so maybe tomorrow will be a good day to look at it, but no today. So we start with the pound New Zealand, and that's what I mean, So this is where sometimes you got good trades and you back again, don't know what's gonna happen. Maybe it's gonna stop out from there, but this is the day that we want to be trading. Beautiful from there. So when we see this weekly like that, and we have a day down, so we have to take the opportunities because the market has not changed directions from there. So pound New Zealand, we just have no much today. Euro New Zealand. Actually, I forgot to set up the Euro New Zealand because I do have in the chat, and I know there's no the pound New Zealand. It was so Euro New Zealand. This is, and again. So look, for example, that weekly over here. All right, that is telling and how strong it went. But the day that the index meter told us over there, just the breakout, not the pullback, the simple breakout, have worked from there, and there it is. All right. So trading, this is an ABC. We draw the line over here. We see the golden touch. We see the index meter. We have everything in our direction with us, and therefore we can just trade from those moments over there. New Zealand, US, again, so we see the direction over there. Here we can say, okay, this thing start getting red. Let's trade short, and like I said, it's fine for if you want to, get some pips, like maybe 30 pips out of the market. Doing that, is fine, but you're gonna be very, very busy doing that. And I like the daily scenario. So so yeah, so that's how that one thing that I looked um one thing I did look yesterday. I have a meeting with GMT, actually is coming, an scanner. And a scanner is going to be something that is going to be incorporated the monthly, weekly, daily, 4 hours, 1 hour, 30 minutes, 5 minutes, and 1 minute index meter. I think that is going to be, quite interesting when it's going to be in our hands. So this week is going to be a bit busy for that, but this is what, if possible, is going to be for so that we can see, if for example, if we are in trades like this one, this is we can treat as reversal, as a shopping level, or we can treat it as reversal. If that is cannot tell us somewhere over there, and unfortunately the problem is that these things happen when we are sleeping. The scanner can pick up those moves over there. But anyway, so New Zealand US, we're waiting for a day up, so we don't have that. The New Zealand yen is continue from where we got over there, and a beautiful ABC. So and again, so ABCs, ABCs, and this is yeah, and the weekly is in that direction. So as you see, we using that weekly there opportunity to what? To enter on a long and direction at the end of the day. Pound Australia, we don't have nothing. We're looking to go short according to what we see. We're looking to go short pound yen, but there's nothing there. Euro Australia, we're looking to go short is already, if the day has left us, it's just better to stay, just wait for the next opportunity instead of try to get over there. Now here we got quite there. That hasn't changed the things. We don't have an ABC app, but we have a pullback to a level of resistance with a very Friday pin bar candle bearish. We got the index meter with a high pound Canadian. The numbers are not great, so that's something I noticed. So, and this is where now is the trade. So the trade will be testing through here. We know the London time normally um, go up, and I have only 30 pips in this move because that's the midpoint. When I don't have fractal, I use the midpoint for that one over here. So that's setup number one for today. Pound US is another one. So we don't have, yes, we do have some funny uh, ending of the pound, but we don't have a reversal. Brexit is still in the big deal at the moment, so they're still talking. There is some protests everywhere. When that is going to finish, we just don't know over there. And the pound US is not high, so we got that the US is not a good number, so that could be quite potential. And again over here. So if everything is going to happen, it's going to happen about here. All right, so that's how we set up over there. For example, in this one, if we would be looking to go short over there, so look where the short could, potential um, have that one there. So that can really kick us, quite nice, put us into nice positions. Euro yen. So this is now I did a little bit of work up here, and again, one thing that we never have to I always keep saying, don't take your eyes from any swing high and swing low. This is my swing high. And why I looking for that swing high? Because from that, never we have something every swing. Every swing high has what? A breakout point. And this is something that I keep telling myself. I have as a rule, that so we will might come back later if you want after they finish that, but I will repeat about that. The swing lows and the swing highs is very, very important to keep always in place. All right, look, giving a nice face with that over there. I can become a painter now. All right. And but the thing is here, the interesting part is in these places there. And this is where now is coming. What is going to happen over there? But you see, once you have this work done it over there, you do only once. And then from that is just time to wait, this and that. Okay, so that's very important. We come back later there. So we got the Euro Canadian. Uh, Euro Canadian over there, and again. So what is telling me over here? That way we gotta write it down that it is in a high Euro Canadian over there, so that's fine. So here is my entry below over there, stop loss 30 pips, and that's it. And nothing more I can do is just walk away. And if I want to say here, yeah, we are below to the midline, with the color change has changed, and everything is fine from there. Euro US, we using that in an advance to what? To trade short. So I did look that one there, got a stop out. Suddenly now, this is my break over there. Euro US is in a high, the US is strong, and the color has changed below the midpoint, the dungeon has changed, and that it is. So from here to there is even 20 pips, but I still have 30 pips. So 30 and 50 or 30 and 60 is quite good scenario, and here we'll see. Okay, so here as well, I'm setting up from there just in case in the future, if anything more, and I've been looking as well through these things here. Australian US. So that's it. Nothing more I can do. If have nothing there, I can actually put a line over there. Say this is the third touch daily down. We can put it over here, and that's fine. It can work, but I always say this to people. Um, there are many voices the market talks to us. Okay, so we got that, we got this, and we got that. Now, so we got potential support, and this is potential resistance. Now, and this is the price right here. Now, my question is to this: which one is closer to the price? So, which is the potential support or the potential resistance is closer to my price? And the question for me is very simple: is the potential support? Is what happened now. All right. So this is sometimes decisions has to be made. If in the future this one does this, then I am happy to say, yeah, now I'm there. So the thing is that if we try to predict the market, we can we can have some success, from time to time, but it will exhaust you, because you're just depending and the you know and good luck instead of good trades. So here is definitely we're looking one direction. The ABC got form over there. Actually, the breaking from that was quite enough. Big pullbacks and there we are. So nothing. Maybe today is could be still good. US is a strong, so we should be going up, but the Swiss is very, very strong as well. So maybe this one, when you see that, is better than to put your hands there. All right. So because it could be trouble over there. US yen was a nice opportunity over there. So at the moment it's still no good. So we might need just to wait a little bit more, and that's it. And we'll see from there. US Canadian, the same. Um, we got the sell with the stop loss in place, but this one, yeah, it's being a bit difficult. If you look over there, it's not easy peasy with that one there. Australian yen waiting for a setup. Canadian yen, we did have previous setup from there. Beautiful candle. So when the candle is telling us over there, and we didn't do the break, we do the pullback. This is the pullback over here, and yeah, so at the moment we just don't know what's gonna happen till tomorrow. And the last one is the Swiss yen. This is quite nice, beautiful weekly. As we see, the Swiss is in the top of the top, and must be gold going up. We haven't have a look yet that one there, and that it is. So 30 pips, that's if the market breaks from here, 5 pips above, I mean 30 pips over there, and that's it. So I take the risk from there, not trading stop, but it's in the number 10 over there. All right, it's 48 minutes. I close the video. I'm sorry to take too long, but I wanted the people who received the video actually look the new 2 lessons that we have today. See you tomorrow. Cheers and bye.